Hello everyone, welcome back to reality. Um, let's go through a couple of trades that we're gonna put on this week and the key moments and key signals that transpired and the situation across the major asset classes. So let's pile up Bitcoin and all the fiat alternatives together in one place with rates and currencies. Let's look at them and let's look at them as a group, what they are signaling together. Bitcoin, just as gold, is already established a tail high low right here at 25,000 on the futures. So this is the ultimate floor for Bitcoin price. So in our model, in our view, this is the floor for the Bitcoin price. Just as 1800s is a floor for gold price. Even the break in trend right here will not change the tail situation. So everything here, as we've been calling out, so every drop right here should have been a buying opportunity, and it is. The flows are currently positive across the board. So even if we get a drop below this level, this is a buying opportunity. This is undeniably a buying opportunity. And we believe this opportunity will come in the next 2 weeks. Why? Because we have two positive signals. There should be positive signals for the dollar is the FOMC, which they're gonna probably raise by another 25 basis points, but the rate decision is not as important as their rhetoric. If their sentiment and their rhetoric will not change, and we believe it will not change. It will stay hawkish. They will stay as ambiguous as they possibly can once again, but they will stay hawkish as a whole. This should be the impacts of the FOMC will be muted, much more muted than the previous ones. But anyway, it should not be negative for the dollars. Therefore, it should not be as positive for the Bitcoin and everything else as we can see. And the signal is pointing out the same thing on an immediate basis, on a short-term basis. And on the August 10th, we get CPI. This is just a mechanical reacceleration in the CPI, which we get based on the base effects and the fact that the energy component will reaccelerate this month, meaning. So we get a higher print, maybe not, I don't know, relative to expectations, but meaning to the previous print that we've gotten, which was what, 3% or 3.1. The print will be higher, so it's just reacceleration. Just as and this should have a meaningful impact on the inflation expectations, on expectation of future rate policy, and all of that manner. Just as right here, we received this was the peak in inflation. From 9.1, it stopped. The rate of change changed. It stopped reaccelerating, and this is the first lower print, sequential lower print that we received. Therefore, inflation established the peak, and Dixie just absolutely died because the future rate policy expectations completely shifted on itself. Therefore, we have this massive move in the dollar, and it changed the direction of all of the asset classes, everything that we trade. This was the pivotal moment in SPY, in Bitcoin, in gold, in everything essentially that is of interest to us. This was a reacceleration to the downside. This was the worst print that we ever gotten since the last 1.5 years. This is the inversion of this one, essentially. Inversion of this move higher. We received this one. This was the low in inflation. The bar our model and our expectation. This was the lowest print, and we will be hovering around 3.5% for the foreseeable future. Therefore, I don't see. We think that this move might have gotten just a little bit ahead of itself. So the Dixie is bearish. Is bearish trend. Is bearish tail. Is bearish everything. Though the monthly chart hasn't closed yet. But I do not expect to see just a complete continuation of this move like we get right here. Break of the tail support, break of the major support, and then we just continue going lower. No, because the inflation is still elevated and will remain elevated, and the rates will remain hovering about the same levels, or maybe even pushing higher a little bit. So the dollar, it is negative. It's undeniably negative. It's showing incredible weakness, but it's not the just gap down and go move. It's not just the move that signifies the gap up and go for the gold move, and it's not the same thing, and it doesn't say the same thing for the Bitcoin. So gold is not yet ready for the massive upturn, as well as silver is not yet ready for the massive upturn and the break of the into the all-time highs, just because the dollar is falling, the dollar is showing the incredible weakness. It's undeniable, it will continue to do so. But the other lever that as much as important is rates and rate expectations, and those have not yet shifted. And they will not shift until we hit a refinancing cycle, second phase of the credit cycle downturn, which we are supposed to get in the fourth quarter of this year. When we get this move, and if that happens, it is inevitability. It has to happen because the catalyst is embedded in the maturity of the bonds anyway, so it has to happen. It will start in the fourth quarter and just will slowly accelerate, especially for the government refinancing, accelerate in 2024, 25. So they will be forced to pivot. And when they do, there are two options. They either pivot and lower rates, which will cause a massive move in dollar higher, massive move in Bitcoin higher, and everything higher, or they will hold the rates at the same level and they will not pivot, and they will be forced to finance and to provide liquidity anyway, and it will force gold higher and Bitcoin higher. Essentially, there are two possible options for them, which lead to the same consequences. So for us, it's all the same thing. Just path dependency and how fast it will happen. We believe, just based on the tail picture for the gold, dollar, rates, Bitcoin, this should happen in the next 3 quarters, third quarter of this year, or fourth quarter of this year, or first quarter of the next year. But we are trading the immediate future, the short term. Let's see what is going on right now. So this move has definitely got ahead of itself, and the upcoming week should be positive for the dollar on a relative basis. The thing we will be looking for, if they change that, once again, I'm repeating myself, if they change the rhetoric, we'll be listening to the press conference very closely. They should not do this. They cannot afford to do this, so therefore they won't. This should be positive for the dollar on a relative basis. And the August CPI print, we're not claiming to be an expert on the inflation overall, but it should be positive. And if it does come through as positive as re-acceleration on the rate of change basis, then this also should be positive for the dollar, and the short-term rates are signaling just that. So the dollar is, I'm doing the same thing all over again. This is the trend level, this is the tail level. Essentially, theoretically, by our model, it can go back into the 103 and still be a good short. Essentially, it can consolidate right here, can pop up even higher, and this will still be a continuation pattern that we are looking for. So we are not gonna be short dollar heading into this week, and by our understanding of what's going to happen this week and the week after, we are very cautious on SPY. We think the volatility will pick up. Undeniably, it will pick up. I mean, not just volatility to the downside, meaning because the range on equities has widened incredibly, and the range of possible outcomes has widened as well. So we just have to wait and see. In the cryptocurrency space, once again, we are looking for the same move all over the board. This sweep of these lows, sweep of everybody who is below those lows lower, and this is the buying opportunity. This is your potential buying opportunity, and the next move higher. When this happens, we do not know, but this is what we're expecting. This is what will likely to happen. Everything that is below 28,000 is a buy, is an undeniable buy. Same thing for Ethereum. Futures for Ethereum. Everything that is below 1800 is a buy, with a stop loss below 1600. This is the tail support for Ethereum as well. This view, this is our view. We are holding our, as I've been repeating myself, we trade based on our trend model based on these signals. And since the last signal been generated on the 2nd of January, somewhere around that region, we are still positive. We're still holding spot Bitcoins essentially. 7%. We are still holding it. We are up 77%, and we will continue to hold it until the signal changes, and it will not change until we break a tail support. So that's the reality of it. Positive crypto. Not short term, but overall in intermediate term, definitely. Dollar. Let's not look at the dollar. Let's look at the things that we are interested in. Is USD/JPY. This move in USD/JPY has surprised us in very much so. It did look like a short squeeze, but it's not really. Short squeeze is this one. These are the interventions by the BOJ, and these are the short squeezes below the closest liquidity. It gets bought back. This was a clear break, and we thought back then it was a clear break in correlations. We were essentially very surprised by the move in the dollar because the whole rate complex did not change at all. The long-term rates, short-term rates in Europe, in the US didn't change at all, and seeing this tail break in the dollar surprised us very much so, especially to see this break in the USD/JPY in the trend resistance right here surprised us very much so. This move of this magnitude surprised us because dollar and the JPY has been moving in tandem with the short-term rates, and short-term rates didn't do anything. They didn't even break that trend support right here. What they established is a high-low on a trending basis around 4.66, and this leads us back to 5 area and back to 5 even higher. So this is the trend support for the short-term rates, and they will be creeping higher once again. And this move in JPY just astounded us because we didn't think that this decoupling of that magnitude can happen, but it did happen. Although we are just snapping back to just a simple mean reversion, and we think that JPY will continue going back to 145. But let's look at the 10-year yield picture and the dollar picture all at the same time. Let's do this. Let's pull up a dollar alongside of it, and Dixie. So what we have right here is a discrepancy between the trend signals, which is pretty huge. Essentially, what we have. We've been calling for long rates for a while. It's very slow moving. Naturally, we've been calling for that as well. It's not going to be just a gap and go move, and just is very slow moving and consolidating in nature. So this is the trend support for the rates. We received the move that we expected. You remember we've been calling for before the CPI came out. We've been calling for this CPI, that CPI should be negative for the rates, and we've received this massive repricing of rates lower, but they didn't even break the trade support. Essentially, this is all of this. We expect this thing just to continue consolidating right here and do another move for higher. So with that CPI print, rates didn't break even the trade support at the same time, while dollar had not only broken its trade support right here, it's also broken its tail support right here, which is an incredible divergence. So it just speaks to the weakness of the dollar overall. But what we expect and what we've been calling for again and again, this is nothing. This is just confirms our view. We are long rates, we're short TLT, and therefore if we are correct in our vision that this week and next week should be positive for rates, we will get this move. And we do expect to get this move on the August 10th print. We do expect this to re-accelerate higher meaningfully. We shall see. We may be wrong, but this is what the signal says. This is not what I think. This is what the signal says, because it hasn't even shifted this trend. If we had broken below 3.665, it changes everything, absolutely. If short-term rates had broken below its trend support, Yes, this is the... If we had broken at least the trade support on the short-term rates, I would completely understand everything that is happening with the dollar and with JPY, but no. This divergences in between the rates, what the rates are signaling, and what the currency did, what the JPY did and the dollar did. We are staying with rates, therefore we're looking to short the JPY. We think this was just a counter trend move, and with a little bit of adjustment, let's close this one, let's get back to JPY. With a little bit of adjustment, we do expect this to continue higher because the flows are still positive on the USD JPY. All we did right here is just retested its trend support and closed higher, meaningfully higher. We expect this week to be some sort of a consolidation, and next week, if we are correct with rates, we expect USD JPY to continue higher, continue back into 145. If we will receive a clear signal on the short time frame, we will get long JPY itself. But if not, what we're looking for, all this talk has been leading up to this potential trade that we are looking to take, is Nikkei 225. Somehow, in a very strange way, the weakness of the JPY leads to inflows into the Nikkei. Don't ask me why, don't ask me how. This is what's happening. I'm just, in a very simplistic way, let me pull up the Nikkei chart, let me plot the USD JPY on top of it, and you will see. We are running our rolling correlation model, and this, what we picked up on a couple of months ago, right here, when the correlation turned incredibly, correlation began to be between the currency and the Nikkei, began to show some tightness in between them. And the first signal we've gotten through negative signal we received on Nikkei itself. It broke the trade support right here and created an intermediate lower high. This is a usual consolidation pattern that we observe on multiple instruments. This is the weakness. Next move in this is in JPY. We get this extended move lower in the Nikkei itself, but nothing has changed here. Nikkei is still positive on a trending basis, and now it has established a trending higher low right here, and we are looking to take, based on the JPY, based on the idea that JPY should continue higher, based on the signal that JPY provided us, bullish trend, bullish trade, and just it took out the trend support, just did a head fake, nothing else, nothing more than that. And Nikkei is incredibly positive, is still incredibly positive. We expect the continuation of this move. In lamest terms, I don't know, I don't like calling this way, but this is usual, what is it called? Bull flag. Yes, it is a bull flag. This is your bull flag and continuation higher. So this is the idea. This is the idea, and what we are looking for to do is we're looking for weakness, continuous weakness in the JPY, which shall lead to the continuous strength in the Nikkei itself. How we're going to play this? This is the trend support right here, and you can either play this with DXJ, which is in itself pointing out the same thing. It's incredible performance, incredible ETF. The move has been absolutely astonishing. What we're looking for, if it gives us any sort of a retracement, preferably back to 82, we're gonna absolutely buy this with the floating stop around $80 somewhere below the trend support. So this is the idea. We are looking to get long of the Japanese equities through this ETF, through the DXJ ETF. Over for the next 2-3 weeks, let's see. We will definitely get an idea in the next 2 weeks whether we are correct or we are incorrect on this call. I'm pretty sure about that. But this is what we're doing. We think the balance of probabilities are skewed to the upside. So another interesting name that we are interested is 6146. We're gonna go right into the stock market itself, and we're not going to even hedge for the currency. We're just going to buy these names if we receive the signal. 6146, Disco Corporation, tech name. We're going to get long of it, and Mitsubishi. I do want to get long of Mitsubishi right here. The signal is perfect, everything is beautiful, and if we decide that we want to go long the Japan, these are the two names that we are gonna buy. Probably it's gonna happen at the beginning of this week. So this is the first trade. This is the first trade we've been contemplating. We've been looking for and expecting. Okay, this is what we have on the currency side. A couple of words about the Chinese yuan. Absolute nothingness. First of all, it's still bullish trend, bullish trade. The signal is still positive. We're still waiting for devaluation of the yuan, whatever they're trying to do, even if they are not easing, and it's still not enough to defend the currency. So it's just in consolidation. Yuan is in consolidation. We're not looking to get long or short yuan, but it's nothing good for the HSI, nothing good for the Chinese market as a whole. People really, I see people on the FinTweet, people that I respect and I follow every day. I read them every day. Everybody wants to get contrarian, wants to get long of China, but it's just we try to do this as well, but it just they're not easing. Where is it? Oh my god, they're just not easing, and we're just not getting this lasting impulse in the HSI itself. So the signal is negative for the HSI. It's bearish trend, bearish trade, and bullish tail though, but it's bearish trend and bearish trade. So just point to the consolidation. We are monitoring the situation in China very closely. If we get some sort of a lasting impulse, if they're going to start easing, if they're going to start devaluing the yuan, yes, undeniably we're going to go in. But now we don't have any indication that from the currency and the market itself and the equity market itself that this is going to happen. CFD, the thing that has just a little bit better structure, incredibly negative. There's nothing else to say, and they've been disappointing and fundamental data, and they are not easing, and I don't know, it's just a waiting game. Let's see what happens. So that's the reality. That's for the USD CNY, and that's it. We've been highlighting for a long time the Mexican peso. There's nothing to add, nothing new to add here. Okay, let's leave it at that. No, let's touch on the Norwegian krona. They export a lot of energy, therefore the higher the energy price goes, the better. The higher the oil price goes, the better. The higher the gas price goes, the better for them. The signal has turned into the negative territory for the. When I say it turned into negative territory, I'm just talking about the chart and how it looks. If the chart is going lower, we say it's in the negative territory. It's positive for the krona. If you want to get long the Swedish krona, you have to get short of this pair. Do we have to do this right now? I don't know, but we don't have a clear signal on a trading basis yet. But the thing that happened in the last 2 weeks that we failed to highlight, that we've been observing, but we have failed to highlight, is the break in oil to the upside. We established first time in oil, first time since the beginning of, let me pull up the CL contract. I can't stand this. Since we first received a negative trend signal right here, what was the data? I don't know, but it's been a long time. In all that period right here, this is the first time. On the previous week, we received the signal turned positive on a trending basis for the first time since, well, for a long time. So all of these moves in our model were meant to be sold into, and this one as well, but right now it has created a tail support right here. It broke the trend, and now we are slowly creeping higher, and we are looking to take longs in the oil space. We're looking to take longs in the oil companies. We're going to play this move in oil companies themselves. we believe we are going into the 83, into the tail resistance right here. Whether it breaks the tail resistance at 83, $84, we don't know, but we are going there. It acts as a magnet in our model, and we, on every possible pullback, which we will not get probably, we're gonna get long of oil through the oil companies, and I'm gonna go through a couple of them. Just let me touch on the Norwegian krona once again. First shift into the negative territory. This is very good for the Norwegian krona. All we're waiting for is a some sort of the more lasting move in the oil price, and a little bit more clear picture on the krona itself. So we're gonna wait for a couple of weeks more and see how it transpires. We are a little bit unwilling to take a long-term positions on any of the currencies against the dollar, just because the dollar hasn't not yet confirmed the switch into the bearish tail, and we haven't received this move in rates, the meaningful change in future rate expectations. When it occurs, when we have the first signals that it may occur, yes, we're gonna shift, and we're gonna get long of the massively long of the currencies that we like. But it's not now, not this week, and not next week, definitely. But let's go forward. Oil, the names that we are. Well, let me close the window. The names that we're going to be playing this with is the usual suspects. First of all is XLE. We're just looking into the ETF itself. Bullish tail, bullish trend. If we get a retracement back to 80, if it's even possible, just if it gets back down to 81, we're gonna get long. We're gonna accumulate linear position, long linear position. The volatility is this is a heavy week on the earnings side for all of the energy names, big names like Exxon, Chevron, Total, all of them reporting this week. But the volatility has, because of this move, because of the volatility in the single names in equities, single equity names are so correlated with the volatility of the oil itself, and volatility of the oil with this move absolutely disappeared. The premiums that are supposed to be building up because of the idiosyncratic risk connected to the earnings report on the single equity names they're just not there, But it is still a nice place to sell some puts. I'm pretty sure that when we're gonna get some sort of pullback, we're gonna sell puts on a couple of names. The best ones that we like is Shell, sell puts on Shell. I don't remember, if I'm not mistaken, it's 30 or 35 delta puts, or 25 delta puts, 60 puts, sell 60 delta, 60 strike puts on Shell and Total. TTE, if we can find 57, 58 puts on Total, we're also going to sell those. Exxon has been disappointing for a long time. Let's see if it can catch up. It's interestingly how disappointing the Exxon price action were, and the relative weakness against the Shell and Total respectively, and CVX and Chevron as well. These two names, Exxon and CVX, are much more weaker than the Shell and Total, and we're going to be looking at Shell and TTE to sell puts on first. So these are the ideas. We are definitely going to sell some puts. Definitely going to get on this move with the oil. First of all, we are going to sell puts on Shell and Total because we can roll them in the future. And the other thing we are going to do is going to get long XLE if we get a chance, if we get some sort of pullback. This is the idea with the oil. Oil is definitely, as we outlined, it's going back into the back end of this year should be positive for the oil. And if we're going back to 83, there's plenty of room to pick up a couple of nice moves on the equity names. So this is the idea on oil. It is supportive. It is in contradiction with our dollar call, but we do not expect the dollar to get incredibly strong from here. We just expect it to hover where it is, not to show weakness. But JPY is supposed to show weakness on a relative basis against the dollar. Therefore, long the JPY, long the Nikkei. If at the same time you can get long of the US oil, therefore you can be short dollar at the same time while you're long dollar with JPY. So as simple as that. That's surprising how you can pair up just observing the flows and correlations and understand that if you're going long JPY, if you're going long Nikkei, you're essentially going short JPY, and if you're going short JPY, you're essentially going long the dollar, and if you're going long single equity names in oil space, you're going long the oil and you're going short the dollar. So therefore you have that as your portfolio, as your balanced portfolio, go long and short the dollar at the same time. Okay, this is what we are doing here. These are the couple of practical names that we like. Nothing changed in the physical uranium ETF. With uranium, nothing has changed absolutely. When it dips below 1590, we are waiting for this opportunity to happen. We're gonna get big time long UUN, and we will accumulate the max position on UUN. This is the tail support, 1467, and this is the trend support. If it dips, even if it continues lower, we do expect something like this, a continuation higher from here. Not necessarily we expect a massive move from here. We just expect to do the same, to do the thing that it has been doing for a long time. It's doing these waves, consolidating. We are just accumulating at the low end of the range. We are comfortable with this. At the same time, on the CCJ, we gonna sell more puts. The last time we sold, we've been doing this for a long time already, and the last time we had an opportunity, we sold on this day. We sold once again 35 delta puts out of some couple of out of the money puts. I mean, just out of the money puts, and we closed them in 75-80% profit right here. Absolutely beautiful. We've been doing this for a long time on these drops, and we are gonna do this again. If it dips in 31 in the trade support, we're gonna sell puts, accumulate linear position. If it dips into the trend support, we're gonna do the same thing. So it has been profitable so far for a long time, and we believe it will continue to be so. Another short dollar position. Okay, this is the setup in commodities, in the key commodities. I mean, in the key commodities, let's look at the copper as well. The copper is negative trend, negative trade, positive tail. There's nothing to do there. It's incredibly correlated, and once again, in a layman's term, let me pull up HSI. Let me plot the HSI and look at this. The correlation is impeccable with the HSI and with CNY. If they debase, oh my god, if they do stimulate, if they let the currency go a little bit, and if they let the CNY go a little bit, we're gonna get a nice pop in the HSI. Therefore, we're gonna get a nice pop in the base metals, industrial metals like copper, essentially copper. If you want to play metals, you better play copper, the most liquid, the most interesting, and you can play it with miners. So no signal here, no signal here. So we are looking to get long of miners as soon as we get some sort of the meaningful change in the signal right here in China. And in copper itself, there is no such signal. It's still negative across the board. There is no signal to get long, to get meaningfully long of these names. But when this signal comes through, which is, it should come through, obviously FCX is incredible long. We are looking to get meaningfully long FCX into that move. Instead of get long China, we're just gonna get long FCX, and our favorite one is CCO, Southern Copper Corporation. We're gonna get long of this name as well. No signal there so far, no meaningful signal here so far. So be mindful with miners. Be mindful with China and be mindful with copper at the same time. Fiat alternatives, gold. The setup is incredible, just as with a Bitcoin. But when we receive such a signal on Bitcoin, it's not as rare as when we get this signal with the gold. When we are as close to the tail support on gold as we are right here, this is the tail support for the gold. The risk reward is incredible. So yes, we've been accumulating long position for a long time. We've been long the gold for a long time. Yes, as an inherent diversifier. But as I said in the beginning, yes, the dollar shifted, but the rates has not yet shifted. If we get a change in rhetoric, if the August 10th CPI comes out weaker than expected and inflation just dissipates, yes, we're going to change our view entirely, and we're going to get long gold with leverage, expecting some meaningful repricing higher. So far, it does not look like that, okay? But it's very rare to see the tail support for the gold being as close as it is. So we believe this is the floor for the gold price. We're never gonna get below 1800s. I mean, what do I say? Like never. It is possible that we get an incredibly harsh refinancing cycle and the Federal Reserve will decide not to provide liquidity and let the system crash. Yes, absolutely. We're going to get below 1500s on gold, and everything else will go in hell. It's not the best case scenario, but it is a possibility. The nuclear war might happen. It is a possibility as well. It's going to get negative for the gold in the first couple of days, definitely. But it is the tail support right here, and we are long, and we do not expect it to go below this. All we expect to happen is a continuous consolidation for the gold price and for the silver as well. Not this meaningful repricing higher. It's not yet the time. But even if they raise by 25 basis points, it's not going to be as negative for the gold price as it been all time in 2022 when they've been raising rates, and even right here. No, it's not going to be. This was the last major repricing or raise higher. It's not going to be the same. It's just going to stay maybe in consolidation above the trend support, and that's it. Even if the August CPI comes in hotter than expected, gold should hold and continue consolidating. The problem with gold is that it will continue consolidating, and it can continue to consolidate for a long time until we get this refinancing, some sort of event. I mean, something should break, and only then we'll get a pop in gold price. But the problem with gold is that you have to tie up some capital in order to just sit and wait. You can do this. Macro people are absolutely happy to doing this, but we are much more short-term oriented, and only when we get a meaningful change in the trend signal and a trade signal, only then we'll get max long gold. Right now, we do not expect meaningful repricing, nor we do expect a serious downside right here. So let's wait. We might be wrong on everything that I just said, but the signal is as follows. Be long of gold. Undeniably, it is a good place. Even right now, it is a good place to be long of gold, to accumulate your position, because your ultimate stop loss, the tail support for the gold, is 1800. What is it? It's 7-8% below the current price. It's incredible. I do not see, based on everything that we know about macro, based on everything that we've studied, based on all of our models, we're not supposed to go below 1800s on gold. Unless, once again, some major correlations will break. The relationships that have been standing for hundreds of years will break. If you bet on this, yes, be very careful about gold. Now, silver. Silver always front runs gold in our model. And the last time it happened was right here. This was the first break in silver since the beginning of 2022 into the positive territory. This was essential creation of the weekly high-low, establishing the new trend, and all this move was supposed to be bought into. So this happened right here, and only a week later, let me pull up the day, it was 4th of November, the gold shifted in the positive trend territory on 4th of November, and the silver did this on 3rd of October. So essentially a month before that. So the signal always front runs gold, and we've seen these things happen again and again in the past. So what happened right here? We shifted. We broke through the meaningful area of interest. We broke through the trend resistance, and now we positive trend, positive tail, positive trade. Everything is positive here. Everything right here signifies for the potential buy on the silver. Be mindful. Even if we get massive repricing of silver lower back into the 23, it is still a buy signal. It is still a buy signal, which is entirely possible in our view. And the gold is so far been waiting below the trend resistance right here. So not much to do in gold, but in the short term, but in intermediate term and the long term, it is an undeniably incredible place to be in. Okay, platinum. It is incredibly hard to trade. I don't see why you would even attempt to trade it, but the signal is positive. It's positive tail, and it has been retesting its tail support for a couple of weeks already, and we expect it to hold its tail support and continue higher with the rest of the fiat alternatives group. Just no divergences in between the key names in the same group, which is very important. This is what we're looking for. We've talked about a couple of names in the commodity space and rates. Once again, I've already outlined our position on long-term rates. TLT, we've been short one of three calls on TLT for a couple of weeks already, for two weeks already. We're just waiting, collecting the theta decay, and that's it. Not much to collect, to be honest. It's not as profitable as selling puts in these regions when the price retests its trend support every single time. If you would have done, you would have sold puts every single time when we sold puts, you could have just closed them in 2 weeks and made 70-80% of your money right here on those puts. But right now, it's not as lucrative as it has been because the volatility just isn't there. But it is still, if we are to have a position, this is what we have. And we are looking into on the lower time frames. We are waiting for something like this to happen. For this, we are looking for this break, and we are looking for the continuation lower. And if we are correct in our contention that it will be reacceleration in August in inflation, we would like to not only with those calls that we have, we would like to buy more puts. But this will be decided just a little bit later on. But we are short TLT, and we expect, if we are correct, we might even retest 96 on TLT once again. But it can take time. On the other hand, if let's say we are completely wrong at everything that we've said, if this is the one of the reasons why we think we are not wrong, because the tail TLT has not yet shifted into the positive trend territory, just as well as long-term or short-term rates has not yet broken into the negative territory. So therefore, this is the situation with rates. The whole rate complex is signaling the same thing. If we get some sort of a recession tomorrow, or inflation will reaccelerate to the downside or in August, absolutely, we're going to be absolutely wrong, and we will break 104 level, which is the trend and tail support at the same time. And the two possible scenarios: either inflation just disappeared from the system, absolutely disappeared, and soft landing. Federal Reserve successfully achieved this soft landing in inflation as well as soft landing in the economy, which is empirically is not possible. But let's say this is what would happen, or we are going into the harsh recession very soon. It's not the signal. It's not the signal yet. The signal, it points to the opposite. So this is where we are. And we've been calling for this. If you remember a couple of weeks ago when this move happened, we've been calling, so okay, get ready. The CPI, we might get a serious bounce in rates, and this is what essentially we've gotten. Continue short in TLT. Short-term rates. I want to get long of them through the ZT. ZT, let me This is a continuous chart. Now let's look at the rates themselves. We believe, as I've outlined already, we believe this is the creation of a trending high low into the tail resistance into the essentially cyclical high, which will take us higher, which will supposedly take us even into the 505. And I'm asking you now, if we are seeing this move in the next month, if we are seeing this move high into 505, what do you think the dollar will do? What do you think the gold will do? What do you think the Bitcoin will do, or SPY will do? It's not going to be as negative for everything else. It's not that gold, Bitcoin will break its tail supports. It's not that dollar will break its tail resistance and shift into the positive territory. No, but it's definitely not as positive on a relative basis to every other asset class other than the dollar, right? So this is the thing that we are observing right now. This is what we think will happen. Okay, these are a couple of cents on the rates. This is what we are preparing to do. Long ZT, short TLT. High yield. This is astonishing. If you are calling for recession, high yield bonds at least should point to the same thing. But no, TLT is still, TLT should, if we are getting into the recession, TLT should break into the positive territory. It should break the trend resistance and establish a trend, a positive trend. Right now, it did not happen. It hasn't yet happened, right? So this is one major variable. And if you're calling for recession, HYG, high yield bonds, should not be signaling bullish trend and bullish trade and bullish tail. So, and this is what they are signaling right now. High yield bonds are squarely into the positive territory. No recession on the horizon right now as we are seeing this. We were thinking that this might happen with this signal that we received, which got absolutely obliterated just a week later. But what happened right here is complete decoupling from rates. Once again, just as rates, short-term and long-term rates, remained and continued holding its trade and trend supports and continued marching higher, HYG, which is 90% correlated and has been 90% correlated for the last 2 years to the rates, and are supposed, well, fundamentally it's supposed to be correlated to the rates, to the short-term rates. And the dollar, which is supposed to be correlated to short-term rates, shifted into the opposite direction, which is astonishing. And with these rates and with these repricing of rates, this leads us to say that the next repricing of rates, and if we are correct, the rates are going to 505. It will not be as negative for the HYG because the correlations are not there and the impact is much more muted than we've seen before. And this is positive. This is positive for the signal is essentially positive. We're not seeing a recession. This is totally fine. Therefore, we are long SPY, and with all of that volatility that we're gonna get on SPY in equities, related to the FOMC and related to the CPI and related to the unemployment print that we're gonna get in the first week of the next month, we will see what the reaction will be, but it is just another buying opportunity for the SPY. It's just another buying opportunity for QQQ. It's just another buying opportunity for the names that we like. This is the idea, and it's all can be based around XYG, but it's not. I'm just saying that you see that we are looking at everything at the same time, and we are building a comprehensive picture. LQ rate hedge corporate bond ETF, bullish trend, bullish trade, everything is perfect right here. Risk on, essentially risk on. Even high yield EM, emerging market high yield bond ETF, bullish trend, bullish trade, everything is all right here. Investment grade bond, bullish trend, bullish trade, everything is all right here. Again, everything has decoupled from rates. Essentially rates, it looks like rates are irrelevant at this point, honestly. So I don't know. I don't know what can be extrapolated from this. Okay, now into the. So, were there a couple of trades that I forgot to discuss? No. Okay, let's look at what we can do. So you know that we're running our short volatility strategy with strangles. We are systematically selling strangles on the names that we like before the earnings. So the names we're looking for this week is GM, GE. We are still thinking about the Spotify. I don't like it too much, honestly. I don't think we're gonna sell strangles on these on spot. Lamb Western Holdings. We're definitely gonna sell a strangle on these guys. RLY and HSI. These are just a couple of names that we're gonna be selling volatility on. Delta hedge strangles. This is essentially what we're doing. Okay, I'm just providing you tickers. Maybe you would like to do the same thing. We do not disclose the mechanics of the strategy, but it's just delta hedge strangles with a couple of proprietary mechanics that we put in. Let's say that. Okay, big picture overview of major indices. SPY, SPX. Let's look at the SPX. Where we are. After this consolidation, after this massive move, we've shifted into the positive territory. We've been asking ourselves, wait a second, is this a first bullish trend signal for the SPY? And on this week, we were absolutely certain of it. And we've been planning on buying and getting long equities significantly when in the next couple of weeks. But then the bank failures happened, and we received this horrible -5% week on SPY, which is laughable. Once again, what did they do? They provided liquidity, and we went back up into the positive trend momentum, and since then we've been religiously calling that this is long, this is long, this is long, this is long, and looking at Apple, Microsoft, Google, all of the big names, they've shifted into the positive territory as well at that time. So after this small consolidation, we pulled up back into the tail resistance, and now we are standing below the tail resistance. And usually in order to break the tail resistance, we have to consolidate for a couple of weeks. We have to build a structure that allows us to push above 4600 hundreds. If I'm not mistaken, that's a pretty big strike. The options activity around that strike is incredible. So in order to break above 4600, we will have to consolidate a little bit. But the setup is as follows. We are seeing some weakness in the single names, in the big names that we are observing. Obviously Netflix and Meta, and Netflix and Tesla, the first ones that broke. Everybody else is still holding that trade support, but we do not think that this will happen. We think we're going to get a nice retracement in the next 2 weeks, which will be a bias. This is the trade. This is the tail support for the SPX. The closer we get to the trade support, the better the move will be to the upside. So essentially, to sum this up, every move to the downside, we are the buyers. We're going to be buying the names that we like. We're going to be accumulating a couple of things that we like, and selling puts on the names that we like as well. So this is the situation on hand with SPX. In short term, I have no idea. It can do whatever it wants to do, but we do not want. We think that this move has exhausted itself a little bit, and now we're going to take a breather and consolidate for a couple of weeks. What shape of the consolidation it will be, like, God knows. How severe the consolidation will, the retracement will be, God knows. But we think that we are going to get this move lower. Therefore, we're waiting for the SPX to buy. we will be start buying things below the 4500 right here. Below the 4500 we will be start buying single names that we like. Just clear as a day. Same thing with for diamonds signaling absolutely the same thing. Bullish trend, bullish trade. Even if we get retracement, it's just a buying opportunity. Same thing with our IWM, absolutely. There's your breath. Pick it up again. The lower it goes, the better the buying opportunity will be. Same thing with IWC. Same thing with QQQ. No major signals to the downside. So far, all of it in our view is a buying opportunity. Okay, we've gone through the XLE. Definitely buy XLE. All of the sectors are positive trend and positive trade and positive tail. Everything is bullish. Everything is bullish. Although we are at the top end of the range right now, everything is bullish. So don't buy right here. Wait for the pullback and accumulate a couple of positions that you might like just a little bit lower. This week might be negative for equities, and the next week, as we've been explaining, if this transpires, if inflation reaccelerates back again, this definitely should be negative for equities. And if we get this move lower, this will be just another buying opportunity. That's all I can say about this. But let's not look too far into the future. Okay, it's clear as day. Nothing to highlight right here. Okay, these are the indices and big names. Apple. This is the trend support for Apple. 186 is the trend support for Apple. The closer we get to the trend support, the better the buying opportunity. Obviously, and we will be buying Apple at 186 if it gets there. Microsoft, the same thing. Some sort of consolidation. We are testing trade right now. The trend support for Microsoft is 328. The lower it gets, the closer it gets to 328. We will be buying Microsoft as well right there. Google, incredibly weak on a relative basis. No call out right here, to be honest. Let's just wait and see. We do want to play Google in some way or another into the earnings, just because it's so close to the trend support. But honestly, no call out on Google. It's bullish trend, bullish trade. If it breaks 115, this will be a meaningful signal that we will incorporate, and we will. But it's not. It's still, by the looks of it, by the model, it is a buying opportunity in Google right now. Tesla. If you want to do a pair trade, maybe get long of Microsoft, get short of Tesla. Get long of Apple, get short of Tesla. Get long of Amazon, get short of Tesla. Tesla is the weakest of the bunch. This is the first break in Tesla trade support, and we think that we might be going in back to 240 to recess the trend support right here. Any bounce is meant to be sold off, and some sort of a move lower is expected. Definitely, this is all in. Just because the range is so stretched, it moved so much in the last couple of months, it came back into the tail resistance without establishing a normal structure. So any move lower is well on the cards. So it's quite possible to see Tesla retesting 248.40 again. So short Tesla this week. If you want to be long of something, don't be long Tesla, definitely. Amazon. God, do I like Amazon right here. Oh, the earnings, no idea. I know that AWS will not disappoint again, definitely will not disappoint, but overall, I don't know the situation that close with. I'm going to listen to Hedgeye analyst Freebird. Not Freebird. I've got the name of the analyst, but he's very good in retail. I like Amazon very much. And I have not yet decided what we want to do with Amazon, but if we're going to buy anything on this weakness, this is going to be Amazon. We're going to buy Amazon definitely. And the tail on the trend support is 126 on Amazon. Netflix is another one, weakest of the bunch. Nothing to do in Netflix right now. Meta has not yet reported earnings. Bullish trend, it's bullish trade. It's all of this move is just a mean reversion trade, and we believe it has not yet exhausted itself with the new threats coming out, with the still some mean reversion left in it, and the tail support at 353. We believe the earnings result will be incredibly the polar opposite to the Netflix. If on Netflix we've just seen a big up spike into the earnings, which essentially usually you want to sell into if the name, whatever name you are observing, if just before the earnings it does an incredible move higher, you usually want to sell into this because it's going to get lower. And the same thing into the opposite side. If it creates lower before the earnings, is probably going to get back up. There are exceptions, like Nvidia. There are a couple of exceptions. You have to understand what phase are you in right now. But the Meta, the lower it goes, the more interested we will be in putting up a diagonal spread. If it goes even lower from here, just before the earnings, which are on 26th, before the close, Wednesday before the close, yes, we're gonna put up another mean reversion trade. A couple of those we did right here. Every time it gapped above, the lower it goes right here, we're gonna put probably a 310. Well, we don't know. We have to give it time to trade around a 10-15% higher. We're gonna put a diagonal right here. We're gonna buy 310, maybe sell 320 on the calls, on the short-term calls. We'll see. But the setup, absolutely beautiful right here, because the difference in short-term expiration volatility against the, let's say, September, or if you look at the contract, September contract, the vol just off the hat is, let's say, on Meta is 46, 47 on September expiration, and it will be just before, on Wednesday, just before the expiration, it will be 110, maybe 120% just before the earnings report. I'm sorry. So you can sell that difference. So this is what we are looking to do. Netflix, but one thing to point out: all of the big names like Apple, Microsoft, Google, Tesla, Amazon, all of them been showing weakness. Essentially, your FANGs, Mengs, Schmengs, whatever you want to call them. But if you look at the SPY, if you look at the Walmart, if you look at the other big names in the SPX, all of them are showing incredible strength. Look at the BRKA, BRKB, look at Berkshire Hathaway, bullish trend. Everything is perfect here. No weakness at all, and no weakness is expected. The XLV, the healthcare sector, is finally picking back up again. XLP sector is finally picking back up again. So I am absolutely certain with this FOMC meeting and with this CPI print, we're gonna get your default usual outflows from the risky quote-unquote sector, long duration sectors back into the XLV, back into the XLP. You've been observing this, and we've been observing this every single time, and this is what happens. So Walmart, long Walmart, and we do not expect much weakness on Walmart even during this retracement. Visa, long Visa, we're gonna be selling puts on Visa. Yes, big time, please. Come to us just before the let's see how it does and what it does before the earnings, but we're going to be selling strangles on Visa before the earnings, and we're going to be selling puts just after the earnings on them as well. MasterCard, same thing right here. These guys are feeling themselves very good right now, absolutely. Banks, for example, the big banks, the big financials. The market is incredibly strong right now. Yes, we are getting weakness in the tech space, in the big names, in those 7 big names. We're definitely getting weakness in the big names, just like ASML, let's say. Very surprising print. Essentially, the earnings were good. They were in line with expectations. A little bit miss on guidance, just a slight miss of guidance. But so earnings were good, just simple good. It was not enough for the market. We've broken the trend. And it's not negative on a relative basis for TSM. TSM has also broken the trend. And when you get such a big name, one of the biggest names in the sector, shows this weakness, shows the break in trend, you have to be careful about the rest of the names in the industry, in the sector, in the subsector, and so on and so forth. AMD showing weakness, so it's not the place to get long of semis. Definitely not the place to get long of semis. It's not the place to get long AI related stuff. Okay, not this week. So okay, we've been long energy, and that's it. So this was quite a lengthy update. I hope I provided a couple of insightful comments, a couple of practical comments as well. This a couple of oil trades that should be implemented this week, a couple of short strangles that could be put on this week. Yeah, long Japan is looking very interesting as well. So this is what we will be doing this week. Okay, thank you. On to the next one, and see you soon.